Welcome back to another episode of the Anatomy of the Trade. And today, just because the market is so interesting, we're coming back to the market update, but we're going to look at this in a slightly different way. We're going to try to look at the intraday structure because we are trying to figure out where the reversal is. Are we actually bottoming? Are we trying to create the new change of behavior? And with that, let's go to our indices here. And right away, we should notice just the position of the daily chart, where, let's say, S&P is definitely at the bottom of the channel that we have here. So we have the first momentum move up, then we have the first stop in intermediate climax. Then we have another run up, another climactic run into another buy-in climax. And in both cases, those start with the changes of behavior. So something different is going on here in terms of the increase of the supply and in terms of how the volume, the price reacts to that increased effort. And first leg down, second leg down, first leg down, and now we're in the second leg down. So characteristically, let's also notice that the spread is starting to diminish relative to what we've seen on the first part of this decline. So that shows less selling. We also see less selling in the volume signature as well. So we want to go into this area right here and ask ourselves a question. On the intraday level, do we see any type of reversals, stopping actions, capitulation bars? Is there something else that is going on? And obviously define some of the levels that the price needs to overcome in order for us to say that indeed we are potentially experiencing some kind of stop in action. Hi, Franz. So what are your first thoughts on just the intraday picture? What do you see here?
Hi, Roman. Well, this is very exciting because it allows us to use all of the rules that Richard Wyckoff originally proposed in terms of effort versus reward, supply and demand, cause and effect. And as we look at the way this intraday downtrend has been playing out, I think we can see examples of each of these. So in that green box that you've got boxed there, we see the initial selling, probably, capitulation by, really probably ITFs to some extent, seeing a change there and, getting in on that. And then we establish this downtrend, which up until now has been very well behaved. And I think the trend lines that we've got showing there, contain the whole move extremely well up until this point. So, back to you, here we are at the bottom of this trend channel that we've developed since basically the 1st of September. And the question is, what's going to happen next? And you're much better at that than I am, so I'm going to turn it back over to you, Ramon.
No, you're doing great. Yeah, so initial selling, as Franz has said, this was just a very quick get me out. I want to out because I see something on the horizon. I have a lot of unrealized gains. I want to secure them. Plus, I want to rotate from technology to other, more economy sensitive themes. And that's why the volume signature is so high. And that's why on that increase of effort, we have such an ease of the result. It's just like a drop. Initially, volatility stays. So we want to see where volatility is going to diminish. And after volatility diminishes, we want to see some kind of rally. And as we see this rally, we want to assess the character of this rally. Is it going to act as a sign of strength, or is it going to fail? So look at this sequence. I mean, like, we could literally think about this before it happens. We could think about this after the initial decline. So where do we see the initial decrease in the volatility? Well, if you look at the spread, definitely we're seeing that from reaction number 1 to 2 to 3 and then to 4, we're seeing in the spread that decrease of volatility. We also see this in the distance that those reactions have traveled. So we see the diminishing qualities of the distance. We also look at the supply signature and we see a significant decrease of the supply signature. And in the last reaction, there is no thrust down that creates the new lower low. So this is the place where volatility has diminished. What should happen next? Well, we see in our notes here that the rally should happen, and we should assess the character of this rally. Okay, well, what do we see here? The rally is not that impressive. I mean, we definitely trying to retouch this resistance here, but look at the character with which the rally travels. There is a loss of momentum. There is a loss of demand signature as well. So, and that produces this failure, which comes here. And this becomes a natural point of entry for us on the continuation of this initial reaction. So how would we behave here? How would we trade this? Well, we would be thinking that um, we would have at least one-to-one relationship target what we had off the top, and this is 239 points, 240 points approximately, 6.5, 6.7%. So we would project it like this, a one-to-one off the top of this rally, expecting that the target are going to be reached somewhere in this area. And obviously using our support line, which actually predicted this low, and then now is predicting this low as well. So we're in the vicinity. We're also, this blue line right here is the long-term trend line, support trend line of the lows throughout the whole trend. So we are in the very, very peculiar place where if we fail, you know, we're probably going to see a lot more selling, but we really need to see what's going on here. So let's just go into the most recent action. Volatility increases again, but not as aggressive as we have had it here. And even though there is a lot of volume here, we're already starting to see a little bit of buying going on. So somebody's buying on the way down. Somebody sees some value. And that value not necessarily, you know, in all of the groups, but in, you know, in more selective groups. And then as we're having this rally right here, which touches the resistance, then look what happens next. We are failing, but we're failing in a slightly different way. It almost reminds me a little bit of this type of failure where we created the low, we had the rally to the resistance, and then we're failing into this local support. So the price action repeats itself. And we want to notice those type of things in the structure. This is really important because the behavior repeats. We have a very interesting bar here. This bar basically shows that this is the highest attempt to push the price down since the initial sell-off that we have had. This type of bars, this type of indications usually will show us some kind of local capitulation. And if this is a local capitulation, then we definitely need to have some kind of confirmation. What would confirmation look like? Well, first of all, we need to stop moving down. We are stopping here. Secondly, we need to respect all of the support lines. We are. And then thirdly, we need to show some resilience of the price to rally up. How would that be shown? Well, if you look at all of the lows, we have very quick recoveries of the lows, almost like V-bottom type recoveries. This is slightly different on the intraday basis. This is actually, you know, a very interesting trading range where we have attempt to go down, down, shortening of the thrust, local spring, and let's look at this on a much smaller scale. Let's go to, let's say, 15 minutes.
And before you do that, Just one observation that
Yep.
I had while you were talking. If you look at this volume signature, which is the overnight trading, at this low, and if you go back to those previous lows before the rally started off and look, it looks to me like there's just a little bit more volume, which I would assume, I mean, I would read as demand versus the other time. So a little bit more buying participation
This is a good
also.
point that Franz is making. I mean, for those of you who are trading E-minis and you're into index trading, obviously, and you already know this, guys, so, and this is not something that I'm going to bring new to this. You have to look at the overnight volume and compare it to what you've seen before. Because, for instance, whenever you're going to see some kind of increases in the volume signature, they're going to indicate, probably directional bias of the US session, which is the most liquid session. Okay, so let's go to, let's say, 5 minutes. And let's look at this trading range. Well, Franz, what do you see here?
Well, I see what looks like a definite selling climax
Where?
with probably at that last volume spike.
Okay, over here. All
And
right.
yeah,
Or
and then
we
there's
could
a
possibly
test.
just say something like this, preliminary support, because this is the US session, so the
Yeah,
volume
okay.
signature naturally going to be the highest here. But I like how the volume signature here increases into the down move. So it's just like, why would it increase? What's happening there? So obviously some buying. And then the lowest point, and still looks like a spread has this climactic run to the downside. Let's just put it here. Also, after the selling climax, we have the automatic rally, which is in itself a change of behavior. So that acts as a confirmation also of the climactic low. Okay, so then here is our trading range. So what do you see here, Franz?
Well, what we want to see are tests of support and tests of resistance, and we want to see how how the market reacts at each of these points. So if we're looking at this, we're seeing, and another thing that's always to me, because I tend to be impatient, is I want to see a number of tests. I'm not gonna, jump the gun and make some kind of decision based on the first test. So after basically we've got 3 tests of support, one of which has a very spring-like, it's at the open of the market, obviously, but has a very spring-like look to it, with an SOS, a sign of strength rally, a much better rally here than we've had, anywhere else in this trading range, up to the resistance point of the trading range that we're in. Then an attempt to come back down, which looks aggressive. It looks bearish, but acts bullish, as we say, uh, and to me looks like it's setting potentially a last point of support for at least another test of the highs, and maybe something better. So it looks like a pretty classic trading structure for accumulation in this short time frame that we're looking at, using our Wyckoff structural designations.
Yeah, I like this analysis. So again, stop in action, change of behavior, just to uh, show this in a little bit cleaner manner. That defines the boundary of the range. After that, as Franz has said, multiple tests both at the support, at the resistance level. Second point of fear after the first one. And look at how we're just trying to go down here, sprinting, and then this is the key right here, this rally. It just basically tells us that the decline might be done. We are basically have seen the low right here. This needs to be confirmed. So why is suddenly such, strong call here? Well, I mean, like on the intraday, it looks very strong, and everything starts on the intraday level, right, as we know. And this is a change of behavior. This is a different way of how a price reacts to the upside in the area where we already oversold on the daily chart. So again, this sequence where you need to look at the conditions, either overbought, oversold, where we are in the structure itself, and then you have to look at the tape and figure out what's the tape signal is. Is there some kind of change of behavior on the intraday? And if that happens, then we would be expecting some kind of rally, which we will be judging by the character as to what kind of rally we're going to have. This is a change of behavior. So again, we are going through this sequence very, traditionally, so to say. Conditions are there on the high time frame. The tape reading structural signal is there, and here is an expectation of the rally. We are waiting for the confirmation whether this takeoff is going to be, sufficient. So definitely last point of support right here. Even though there is some aggression, as Franz has said, look at the selling, not that much, and it goes to the higher low. So there is no more significant selling, and the price is actually holding. So we need to hold here. We need to overcome this high on the intraday basis. So 32.50 or 32.40 is going to be important as we look at that. And then again, once you went from daily to the intraday structure, come back to the daily again, or let's say come back to a much larger structure like a 1 hour structure, and then start thinking where potentially this price could lead us, this rally, because we're thinking that we're in the rally mode right now. So obviously point of the resistance, that's number one. And what would be even better is just an ability of the price to come and overcome this previous high. And we don't need to overcome it significantly, even overcoming it a little bit and then still reacting to the higher low and then overcoming that. That will be significant. But so far, we're kind of calling it here that there is a potential rally and we might have made, a potential low. Let's look at NASDAQ, and we're going to jump right away into the intraday. So here's this structure on the intraday, and we have seen that technology stocks actually started to outperform in this area. So it's not surprising that technology is leading again. What also is really, really good bullish sign is that we have the synchronicity of the increased effort, and we also seeing the result increase as well. It's sustainable right now. So therefore, our expectation is that because technology is slightly stronger at this point, that if we're going to have that rally that we're talking about, we're going to overcome this high and maybe come to 11,300. So obviously, all of this needs to be confirmed. So therefore, what kind of confirmation we would see there? Well, as we said, a rally is a confirmation in itself, and then the reaction that is going to be a shorter, smaller reaction than what we've seen before, than this last three, big reactions. If we have a shorter, and probably just stalling here around the area of the resistance and then recovering, this would act as a confirmation. So just going into the end of this session and also into Friday's session, let's see what's going to happen. So obviously, a call here as we're recording this, but for now, it looks okay. How it's going to go, obviously, surprises could happen. All right, Franz, well, what are our final finishing thoughts here on the market structure?
Well, okay, thanks, Roman. Two things. First of all, please go back and read our disclaimer. This is for education purposes only. We're not giving trading
Absolutely.
advice.
Yeah, thank you, Franz.
Secondly, this is such, I am in awe every time I get involved with your analysis, because your tape reading is just I mean, it's so interesting. First of all, it's exciting, and it's something that I know you've been working on a way of presenting this. So just a quick commercial for your series that are coming up that I am really looking forward to on tape reading that are coming in just next month and the next 2 months after that, with some unbelievable guest teachers. It's going to be fantastic. So I am really looking forward to improving my tape reading skills. And I don't know if you want to say something more about it. You probably do, because it's your program.
Well, yeah, I'm excited too. I've been working really hard on tape reading, and I wouldn't consider myself, a full expert on this field, but I've been definitely improving my skills in there. So I feel that this is the point where I could actually teach this material. And as usual, I like teaching together with some other experts, and I've been on the hunt for, those Wyckoff tape readers. And obviously, we have had Gary Follett, and Gary is going to be a part of this, 10 sessions. He's going to have one session in between, the different series. We're going to have 3 series on tape reading. I'm extremely excited that David Wise is going to join me for session number 2. Session number 1 is going to be all me, and this is going to be basics to intermediate concepts. And this is going to be a prerequisite, for everything that comes next. But definitely the highlight is David. And then session number 3, I have another guest teacher who I consider, a really good tape reader. And we're going to go through a lot of drill exercises together. So it's going to be a lot of fun. Check out our website maybe like in a week time, and we're going to have the landing page, and you guys could start registering. But extremely exciting. This is going to become a course of its own, and the whole fall and December, we're just going to devote to tape reading and just going to dive into a lot of details. All right, well, with this, thank you so much, guys, for tuning in again for the Anatomy of the Trade. We are looking forward to continue looking at our trades. It's just majority of them are still in some kind of recovery mode, so we'll see what's going to happen next. Franz, thank you so much. It was a lot of fun to do this session.
Thank you, Ramon. It was.